Alphabet earnings, kicking off a critical 2 weeks for the mega caps. Those results coming on the heels of its rejected attempt to acquire cybersecurity company Wiz. Joining me now for what's at stake is Alphabet shareholder Ayako Yoshioka of Wealth Enhancement Group and CNBC contributor Alex Kantrowitz of Big Technology. Welcome to you both. And, you know, Alex, it's remarkable. Alphabet stock over the last 2 years has outperformed the S&P and the NASDAQ 100. And that's even with that kind of initial scare after ChatGPT came out and people thought Google was going to be a net loser in that. What does that tell us in terms of where the company sits right now?
Yeah, you're right. 32% increase year to date. The company is rolling. And it shows you that it's really survived this first era of generative AI. You know, a year ago, the conversation was all about how search was disrupted and we weren't going to see Google survive this era. And we just haven't seen the migration of consumers to generative AI applications the way we expected in the beginning. And by the way, as this was happening, there's this thing that everybody ignored, which is that we were in this moment of looking for efficiency. And search advertising provides that efficiency. You spend with search, you have a really good way of tracking where your dollars went. And so for Google, it's been a moment where it survived a massive threat and its main product is doing great for advertisers. And so it's a complete narrative reversal for Google, and the company is performing extremely well.
Aya, what are the key themes you might be looking for clues about in the results today? You know, it seems as if the way Alex presents it, the way the market seems to be treating it is, you know, they're able to defend the franchise that they have. I wonder what else it means for the future, though.
Sure. And I think in this environment in which we've seen some softening in terms of, you know, economic growth or some moderation here, you know, I think people expect that some of the ad revenue would follow in terms of moderation. But we are seeing that some advertisers are actually, you know, picking up and dialing up some of the advertisement in order to spur the consumer demand, you know, in this softer environment. So we'd like to see that come to fruition. And then cloud growth, I think, is the other area that we would like to see additional detail on, and how generative AI is really, you know, impacting that growth.
And you know, CapEx or general expense management sometimes becomes a bit of a concern when it comes to this company. I mean, you know, CapEx, I guess, is set to go from $32 billion to around $45 billion year over year in 2024, and then higher still. You think the market is going to embrace that idea and be happy to reward Alphabet for these investments?
Well, you know, they talked about having CapEx being at least $12 billion per quarter in 2024. And I think if it's going in the right direction, if they're getting that return on the investment, and I think this is why the attention will be paid in terms of the impact of generative AI on the cloud growth. So we need to see that spend come through and generate revenues.
Are we nearing a point, Alex, where it seems like you're going to want to have better visibility into what the payback is going to look like for these investments?
Yeah, that's the key question, right? So Google has beat earnings expectations and revenue expectations for 5 straight quarters. But they've had pullbacks in some of those quarters, except when they start talking about AI. When they've talked about AI, all of a sudden spending $12 billion in a quarter or $45 billion in the year isn't so bad. But that's been until now. And over the past few weeks, we've started to see companies, including Goldman Sachs and Sequoia, start to say, hey, where's the cream filling here? Like, where is the ROI on this AI spend? And of course, we're real early. We're starting to get better compute. We're starting to get bigger models. So we are going to see a more exponential improvement in the models the AI industry hopes over the next few months. But that being said, it has to start translating directly into revenue for these companies. Otherwise, telling the market you're going to spend $45 billion this year, it's about AI. Oh, and by the way, that revenue might return an investment in 25, 26. That's going to be a lot tougher to sell, and it might actually cause some problems for these companies.
Sure. And then when it comes to this potential acquisition that seems now is not going to happen of Wiz, I mean, it wasn't going to be big ever relative to the size of Google, but tell us anything about you know, the freedom to move and the freedom to expand by acquisition for this company right now.
Sure. I mean, they've got the cash on their balance sheet in order to, you know, acquire something like Wiz. I mean, they've got a net cash position of $80 billion. I think perhaps some of the regulatory scrutiny that Google has been under for several years may have played into this as well. And so we'll have to see, you know, exactly what type of acquisitions they can make and actually close upon in the future.